Oh, sorry. If you're buying a home in Texas or planning on buying a home, then you should be aware of the expenses associated with the buying process. There are many unexpected costs. Many of my buyers are surprised when I mention some of these. Even though some go towards your home purchase, others you end up losing out on if you decide not to move forward with the purchase. In this video, I will explain the common expenses, which ones go towards your home purchase, which ones can vary, and others that maybe don't apply to you. Embarking on the journey of buying a home is an exciting venture, but it's vital for buyers to be well informed about the various expenses that come along with it. Just a reminder before we get into it, these are specific to Texas, specifically in the Austin area, but I would wager it's very similar across the country. All right, so upfront expenses when buying a home. We have your earnest money. This is the initial expense for the buyer in the home buying process. Commonly involves putting it in an escrow deposit, also known as the earnest money deposit. In Texas, this negotiable amount is submitted with an offer. If your offer is accepted, you are required to submit your earnest money to the title company within 3 days of an executed contract. FYI, an executed contract occurs when both the buyer and the seller agree to the terms of the contract and have signed and initialed all required documents. Escrow deposits are held by the entity managing the closing, such as a title company, and are credited towards the buyer's closing costs. The typical escrow earnest money deposit ranges from 1 to 3% of the purchase price. Next up, we have the option fee. The option fee is sent to the title company along with your earnest money. This option fee is usually between $50 to $100 a day, depending on the nature of the market. In a seller's market, you can expect to pay at least $100 a day, and you're likely requesting 3 to 5 days of your termination option period. During the option period, you are under contract with the sellers of the property. During this period of 3 to 10 days, you will do your due diligence, get inspections, choose your lender, your lending program, negotiate repairs or concessions, and finalize your contract terms. At any point during the option period, you can terminate the contract for any reason whatsoever without penalty aside from that option money. The only thing you lose is your option money, and you'll get your earnest money back. Should you move forward with the contract, your option money and your earnest money go towards your closing costs, similar to the earnest money that we talked about a while ago. Next up, we have a home inspection. Prior to closing, buyers can anticipate incurring expenses for a home inspection. An advisable step, though it's not mandatory, it's crucial for buyers to be informed about the necessary repairs or replacement of the property that they are interested in purchasing. Depending on the contract terms, sellers may be obligated to address identified issues from the inspection. Conversely, buyers have options such as negotiating repairs, requesting a repair credit, or even withdrawing from the contract within the inspection option period. All contingent, of course, on the contract terms. The expense of a home inspection typically falls within the range of $400 to $1,000, with the final cost subject to variables like property size, location, and scope of inspection. Additionally, opting for additional inspections such as mold, sewer, would destroy like termites, or a 4-point inspection can increase overall expenditure. Next expense, we have the appraisal fee. For buyers securing a mortgage, it's customary to incur the initial expense of a home appraisal. However, for cash buyers, an appraisal is usually discretionary. The cost for a home appraisal can vary based on factors of property complexity, location, and loan type, typically averaging between $500 and $750. The appraisal can either be paid up front by the buyer or added into your mortgage costs. Survey next. Buyers financing their purchase should expect an additional expense before closing, the cost of a property survey. This survey confirms compliance with zoning regulation and ensures neighboring properties haven't encroached with features like pools, fences, or structures. While not mandatory for cash buyers, a survey is an option. Survey expenses typically range from $400 to $1,000, of course, contingent on the property size and location. Sometimes the seller will have a survey that's accepted by the title company, and of course, survey, like anything else, is negotiable. So if the seller doesn't provide one, it's commonly a buyer's expense, but again, everything is negotiable. Next, we have homeowner's insurance, which has recently gone up a lot. Unless a buyer is making a cash purchase for their new home, they must secure homeowner's insurance before closing. Certain insurance agencies may demand payment before closing, while others might accept it at closing. Even though cash buyers are not obligated to obtain homeowner's insurance, it's of course strongly advised. The expenses related to homeowners insurance include additional coverage can vary significantly across Texas and the nation. It's crucial for home buyers to comprehend their policy specifics. Are they adequately insured? Is flood insurance necessary? What is their deductible? Now let's discuss expenses paid at closing. There are several expenses associated with buying a home in Texas that are paid at closing, and here are the top ones to consider. First, and the biggest one, is your down payment. A significant part of the buyer's closing cost goes towards your down payment, and the exact amount can vary widely based on your financial circumstances and the type of loan that you're utilizing. Traditionally, many buyers aim to provide a substantial down payment of 10 to 20% of the property's purchase price. However, not all buyers can afford such a large down payment. Some opt for smaller down payments like 3% of the home purchase price, which is especially common among first-time home buyers. Additionally, there are specialized programs like VA loans that offer eligible veterans and service members a chance to buy a home with zero down payment. There's actually other loan programs that have a zero down payment or a down payment assistance type programs that you should look into if you can't come up with at least 3 to 5% for your down payment. Next, we have lending fees. When a buyer secures a mortgage, it's crucial to be aware of the various expenses tied to this financial transaction. These fees, which can vary depending on lender and specific circumstances, significantly contribute to the overall cost of obtaining a mortgage. Typical fees encountered by mortgage applicants include charges like application fee, credit fee, processing fee, and or origination fee, which is usually the biggest one. These fees can range from hundreds to thousands of dollars depending on the lender. In addition to these lender-associated fees, there are also non-negotiable state fees that must be paid, contributing to the total cost of securing a mortgage in Texas. Another significant aspect of mortgage-related transactions involves the escrow. In cases where the lender is responsible for collecting and paying the buyer's property tax and homeowner insurance bills, they often require the borrower to contribute funds at closing. These funds are held in escrow and used to cover recurring expenses that become due, ensuring that the buyer stays current on these financial obligations. Because if you don't pay your property taxes, then you can lose your home on a foreclosure. They can put a lien on your property. Same for homeowners insurance. A lender requires this. Next up, we have title fees and searches. A title search is a thorough examination to ensure that no one else has a valid claim or debt on the house you want to buy. It's conducted to confirm the property's ownership is clear and free of any hidden issues with the title. This process involves reviewing public records like deeds and mortgages to verify who owns a property and whether there are any unresolved legal matters associated with it. In essence, a title search is a crucial step in home buying to ensure acquiring a property without any legal entanglements or debts attached to it. We have closing company fees. The companies responsible for overseeing the closing, typically a title company or a real estate attorney, will charge escrow fees or settlement fees. Their role is to ensure that all states' legal requirements are met during the closing process, and they typically charge between $500 to $1,000 for their services. We have HOA fees. Homeowners insurance. When purchasing a home with the homeowners insurance, buyers should be aware of potential expenses associated with this. Fees may include prorated HOA fees, an application fee, and a capital contribution. Prorated HOA fees cover a portion of the annual or monthly dues paid by all homeowners or maintaining shared areas. An application fee, which might be collected before closing, aids in processing new residents, while a capital contribution is a one-time payment to support the HOA's financial stability. And one last fee. When I wrote the idea for this video, this was before the big National Association of Realtors settlement that kind of has changed the way that real estate transactions as far as commissions are going to happen moving forward starting in July. So a buyer, usually what happened was a seller would pay the commission out of their net proceeds. Now the argument was always who's paying, the seller or the buyer, because the buyer is the one coming with the money. The buyer in a cash transaction or buyer's closing fees plus the bank, right, that's supplying the mortgage is coming with the money. But on the final closing statement, it always had the agent commissions coming out from the seller's net proceeds. Well, now moving forward, it's not necessarily that part's going to change. We just can't post commissions inside the multiple listing service, MLS. So the rumor is that the buyers are going to now have to cover the agent fees. It's not number one, the settlement hasn't passed yet, and number two, it's not necessarily going to be that way, but there are a few changes that will be starting in effect in July. I'm going to be posting this video in April, so a potential buyer's expense could be agent commissions. Of course, everything is negotiable in this video, including agent commissions. It's just important that you find a really good agent and you find terms that both of you can agree with. All right, so now we have costs after closing on a home. Moving costs. Another financial consideration when buying a home in Texas is the expenses related to moving. I won't get into this in detail because you know what all goes into entail when you're moving. And then you have ongoing expenses like obviously mortgage payments, property taxes, HOA fees, homeowners and mortgage insurance, home maintenance and repairs, utilities. So all in all, the bottom line for this is that it costs money to buy a home, but I always say it's a great investment if you're going to hold on to it long term, unless you're some type of flipper or or just like a buy and hold investor. But even those, that's a buy and hold. You're holding it long term. In Austin, we had a crazy surge of appreciation during the pandemic, and then we had a pretty good sized drop. But still, overall, historically, in Austin, we appreciate at about 5 to 8% annually. I myself have made really good financial decisions when purchasing homes. So even though it costs a lot of money to buy a home, I still believe, and sure, I'm a real estate agent, so I'm going to be biased, that it makes sense to buy a home if it makes sense for you. So of course, buying a home entails a wide range of expenses that go beyond the initial purchase price. By understanding the key expenses associated with purchasing a home, you can make informed financial decisions, from closing costs and property taxes to insurance and ongoing maintenance. Being prepared for these financial responsibilities will help you navigate the world of home ownership successfully. Thanks for watching this video. I hope you made it to the end. If you have any questions, just comment below. If you learned anything, hit that like button, subscribe for more videos just like this one. Thanks.